Welcome back. We are in a full-blown panel as we run up to the budget over the next 1 hour. We'll be talking to our guest about what the expectations are. Our budget masters joining us in the studios. We have with us Pranay Saithya, Manish Dangi, Shankar Iyer, Rajiv Anand, Dharvi Dharmeshi and Mihir Vora. Thank you, gentlemen. Thanks a ton for joining us today on the show. Mihir, I'll start with you. Much ado about nothing. Is it a big budget? Is it an interim budget, a vote of account, like we're saying? Nilesh, in fact, a few minutes said this is the trailer and the full picture will be out in July. Do you feel the same?
I think so, because as it is, the budget has become quite a streamlined process, For example, the big component GST is pretty much outside the budget. It's decided by the council. Tax rates for corporates, individuals, especially the new scheme, new regime, is pretty streamlined. So not much left, frankly, to tweak around. But it's important to see the direction in which the finance minister wants to take the budget spending. Because, for example, we've seen a lot of stress on CAPEX for the last 3 years. Whether that continues, and that's what the market's been excited about for the last so many years.
You think so?
Yeah, so that needs to continue, right? So we don't want any disappointment on that side. But the problem is that on the revenue side, they've been curtailing revenue expenditure almost just about 3% growth for the last few years. This is an election year, so there's a balance between trying to do something for the election and the population masses, especially given that rural economy still probably is a question mark, in terms of growth. So balancing CAPEX requirements versus revenue spending is something that we need to watch out for this time.
It's an interesting point, and sorry, just a follow-up there. Could rural be flipping? I mean, just trying to understand. Women participation, remittance is very strong, as Pranjul Bhandari was telling us the other day. Wage growth starting to pick up, El Nino fading. So if you looks at 12 months out, could rural be a slightly lesser headache than what otherwise could have been perceived?
It's likely, yes. Especially, El Nino is one impact. We did see some unseasonal rain in some states this time around. But given that we've almost seen 2 years of not so great rural growth, the base effect itself should take care of a lot of growth. And with raw material prices coming down globally, inflation under control, that is a possibility, yes.
Okay. To be fair, El Nino is just starting, in the sense we haven't seen it played out. So a bit more of, agri pain.
El Nino impact seen, could it be fading? And that could be something in playing on the minds.
The impact of El Nino itself as a phenomenon has not played out completely. So we might not be at the end of that phase. But yes, rural consumption could be boosted, I suppose, by a lot of other factors as well. Mrinal, let me come to you on your take this morning. And, does this also become a very important vote on account or speech to listen to because of precedents? We know that in 2019, the same finance minister in a vote on account before an election was very clear about what she wanted to do and what this government would do when they came back, not if. That's the confidence with which they go into a vote on account. By all accounts, that confidence could be merited this time round as well. In that sense, is it very important to watch out for that what is the next step of policy direction? Yes, you have decided to make in India, you have boosted CAPEX, infra spends are there. Now what next?
So, well, very relevant point. See, the vote on account is clearly going to be a statement of intent. In terms of where does the government see the revenue trajectories coming from, what do they expect, and where do they intend to spend. Now, the spending part is the most crucial part. The government for the last 5 years has been the largest spender in the economy. They have been the force behind which the entire CAPEX story and the growth of the economy has been. So we would like to see that CAPEX number moving up. We would like to see how do they intend to accrue that amount that they intend to spend. So that, yes, it is going to be an intent statement. Indirect taxation is anyway out. It's part of the GST Council framework now. So the direct taxation, whatever they want to do, if at all, generally vote on account is not somewhere they tweak too much on direct taxation, but at least where do they see the revenue trajectory? Where do they intend to spend it? The direct taxation revenue trajectory would be interesting to watch. We would be very keen to observe what do they want to talk about it. The fiscal deficit numbers, that's crucial. If we do get any sense on what would be the off-balance sheet items, that would be interesting too.
Just on fiscal deficit, we spoke with Nilesh of Kotak AMC just a short while ago, and in their view, the 4.6% target for FY26 is a bit ambitious and they may not be able to stick to it. Any call from your side?
I would concur. I think I would say 4.6 or somewhere around that would be very, very ambitious. In fact, the contours are more important. If they are going to spend that money into CAPEX, that's fine. A bit of stretch on the fiscal deficit is all right. Because we are yet to see a significant revival into private CAPEX. Once that happens in a meaningful way, I think the government can decide to spend a little less. But at this juncture, the rural needs support. The economy needs supports in terms of government spending on CAPEX. That needs to continue.
Taking a cue from that, and Shankar, I'll come to you. Rural needs support, and it's been explicitly stated that women, youth, and the poor, so the bottom end of the pyramid is where the support will be coming in. It is still an election year. While the government seems confident about what's going to play out over the next couple of months, what do you think? Do you think this one may be a populist budget or unlikely?
First, I want to sort of disabuse this idea that this will be an interim budget. I don't think this government believes in asterisks. There are no conditions apply. And if you go by past performance, as all you market guys say, is a good guide for
I like the
future.
Refrain, all you market guys
Yeah.
say.
and I think the only thing the market guys say is don't go by past performance, but nevertheless.
But in politics, past performance is an indicator of what they will do. The 2019 interim budget presented by Piyush Goyal was 22 pages long, had extra expenditure of more than 1 trillion rupees. It was an interim budget, so-called. But the Modi government doesn't believe in interim and all those things. They will go in for. So take the context now of the economy. The political need and the economic need are at a convergence spot. You need to keep spending on CAPEX because that's how you're creating jobs, because the private sector is not yet creating jobs. You need to spend on welfare because private final consumption is barely 4%, whereas your GDP growth is around 7%. So even if you want to push that, you will need to do that. Where are you going to spend? She referred to this whole new acronym that has been created by Hardeep Puri now and Mr. Modi, is GYAN, that is Garib, Yuva, Annadata and Nari. Translated, the voting class. Okay. Now that voting class is crucial for 2024, depending on what is their target. Are they targeting ab ki baar 400 par or ab ki baar 350? Whatever is their target, they will focus on that. Unless you understand politics, there's no point in sort of waffling around the economic parameters of what the fiscal deficit will be and all. Mr. Modi, I don't think believes in all his ratios and all. I think he's conservative in the sense that you should have a structure by which is viable, sustainable, just as his politics he thinks should be viable and sustainable. So I expect a lot of things in this budget. I expect PM Kisan, some topping up or at least an announcement, if not an allocation. I expect some amount of push in terms of what they will do for women voters, because the W is actually the X factor in India's elections. And then they might have something to fix the problems of the old pension scheme and the new pension scheme. Yeah. And that's been there in many of the states. Now, having said that, they will also announce a big CAPEX push for railways, because there's much scope in railways for investment and creation of... because it's one area where you have services, you have manufacturing, and you have connectivity, the logistics play. So they will play into that. Roads, we are pretty much at 30 kilometers per day, and I don't know how much more roads you can build, but definitely railways has scope. So I see, if you just put back all the things, Jaswant Singh used to say there is no economics without politics. And so there is the economic circumstance and the political need. So they are converging. So whether she makes only announcements now and leaves the allocations for July, or whether she allocates now, is a call that Mr. Modi will take.
Okay, interesting. On CAPEX, and Mrinal, I'll come to you first on this. There's a point made that in FY24, state CAPEX has shown a 40% growth YOI, and that is looking very strong. Does that ease the pressure a little bit on the center to dole out a big bang CAPEX in a year, presumably of fiscal consolidation? And I know Shankar's views differ here, so I'll come to him as well. But let's assume that, forget 4.6, whatever the number may be, but let's assume that the next 2 years, some inkling of fiscal consolidation. Can they do that simultaneously while not increasing CAPEX numbers too much, because state CAPEX is anyways looking strong?
Well, the last union budget talked about 8.5 lakh crores of central government CAPEX. My estimates are roughly 12.5 lakh crores has been spent in the economy, state and center included. Let's see what number the budget estimate comes up with this time. But state is significant, it's growing, but it cannot compensate for the central CAPEX.
Of course not.
Yeah.
So, I think there's no great merit in getting fixated about the fiscal deficit number. I would say that as long as CAPEX is driving that expansion, it's all right. Subsidies would be a bit more troubling. Off-balance sheet items are something that we need to keep an eye for. I would not be worried about a fiscal deficit, inching higher and being driven by CAPEX. That is not a worry for me. Okay, that's required.
I want to make this point to me here, because I know Shankar is of the view as well that, CAPEX or a fiscal deficit number being higher, right, might be a possibility.
No, Neeraj, one thing one must understand. The fiscal deficit number is just a ratio of your gap between expenditure and the earnings. Okay. Yeah. Now, the economy might grow, and this might actually fall.
Yeah, but it will effectively be the ratio that they will announce.
Yeah,
right?
so if the economy grows, higher growth, higher CAPEX, higher growth could bring down the deficit number.
But the problem with that is it becomes inflationary in pressure. So economists may not be pleased if you have high growth and high deficit. So that is the double-edged sword there.
I don't know whether in India's inflation matrix, the government spending has some role, but actually it's the seasonal ones that trouble them politically. So the tomato story might be bigger than what Shaktikanta does.
Yeah, but be that as it may, the limited point, Shankar, is, and which is what I want to get Mihir here, is that independent of what your economy number is, they will give a fiscal deficit as a percentage of GDP ratio, and if that is higher and doesn't show the path towards the fiscal consolidation 4.6 number or a realistic number there, is there a reason for bond markets and then subsequently equity markets to be worried, Mihir? That's my question.
See, first of all,
or will they take it in their stride?
First of all, I think it's very unlikely that they will not reduce the deficit. They will show a reduced deficit.
Of course they will. The quantum.
No, I'm saying...
Sorry.
Because they have to show a path to 4.5, right? We are going to get included in the bond indices, global bond indices this year. And that's based on the premise that you are progressing on that fiscal consolidation front. Look, every country in the world blew up their fiscal deficits post-COVID. So I think that was necessary and it's done. But after that, we need a path to normalcy. And that normalcy for us is somewhere around 4.5. They have to show it, if not in 1 year, 2 years or 3 years, but they have to show it. So my guess is at least a 40 to 60 basis points reduction in fiscal deficit will be shown this year.
That's for FY25.
FY25, yes.
But 4.5% in FY26 seems doable to you?
I would say maybe FY27 looks more likely.
If you do 70 basis points this year,
even if they show a path to 4.5.
No, that's my point, yes. So independent of whether it gets met or no, do you think the bond markets and the equity markets will be worried if they don't show a 5.5 number or below?
I would
for
think
FY25.
so, yes, because everybody is working with the assumption of 15 lakh crores gross borrowings.
Right.
That seems to be the consensus.
But
right? Which is flat versus FY24. If that 15 lakh is projected to be higher, then it is a cause for concern, yes.
There's another way to look at it this. Since the FRBM Act was passed, Government of India has never met its FRBM target. But every interim budget has a higher fiscal deficit number and the regular budget lowers it by 10, 20, 30 basis points. The question is whether they will give a pathway to 4.6, and that will be given, but maybe it will be pushed ahead. Okay, there is no country in the world which is holding on to its macro numbers. India has a reason to do it because we are already on the JP Morgan index, and then the Bloomberg index we are coming in, and there's one more apparently. So once you have that, you could see two ways. Anyway, the money is coming, so it won't affect the bond market that much, or to keep the trail route. So I tend to think that they will give a pathway because the government is very keen to upgrade its ratings. If you notice, in December, the chief economic advisor put out a whole compendium of essays in which a large portion discussed why India's ratings must be better. And so that is a goal for Mr. Modi. So I think that they will work towards that. So they will give a pathway. It may not be 2026, it may be 2027. They will also probably redefine some of the spending as green. Yeah. You see, that qualifies you for an exemption from the regular assessments among the rating agencies and others. So it's at the end of the day your definition.
I just want to come down to a very simple way of looking at it, and we'll take it through the panel, Mrinal. Today, at the end of 12:30 or so, and our budget masters will be there with us, what would be your best case scenario and your worst case scenario coming out of this budget? The assumption is that there is there's a very minimal chance of any harm coming out of it. No, hidden taxes which rock the boat, etc. But in your view, what would be your, best and worst possible outcome from today?
So, very interesting question. So, if you ask me democratically, most viewers would be liking to see LTCG going away. So that would be a dream thing for them.
That's not happening. Ain't gonna happen. I can tell you that.
Yeah. So I guess people will be happy. No tweaking around that. I guess most viewers will be happy. Most investors will be happy. It would be interesting to watch. There have been corners in the market which have been asking for government to review on the dividend taxation. They've been asking the government to review on the debt taxation. So does the government heed in that direction in some form? That would be interesting to watch.
Just a quick one. Indexation that got removed last year, I mean, has put the debt mutual fund industry, off. Do you think anything could be done on that? Would they revisit that, do you think? I mean, go back on it, or very unlikely at this stage?
I don't think they'll reverse it. In my expectation, they won't toggle back so soon. Dividend taxation seems to me something that could be more interesting to watch. There have been a lot of people who've been kind of pushing for that. Yeah.
Okay. Gentlemen, stay on. We need to cut across to Delhi, where my colleague Manvi Dhillon is in conversation with Sanjeev Puri, CI President Designate and Chairman and MD ITC, as well as Mukesh Bhutani, founder of BMR Legal, plus Rajiv Memani of EY.
Make any changes, and specifically the benefits for new manufacturing companies, which is 15%, which lapses this year. If they can extend by 2 years, given the fact that manufacturing is now picking up in India, I think that will be great. And the second is, as always, I think people do anticipate that on the personal tax side, especially to spur consumption, deal with the inflation, if they can raise the rebate level, especially in the new tax regime on personal tax, from say 25,000 to 35,000 or 30,000, whatever that is. I think I would anticipate that. More than that, whether they will do capital gain tax rationalization, tax TDS rationalization, and the most important thing is how do they deal with dispute resolution, which I think is probably the single most important thing in my view. Whether they'll do it in this budget or not, I'm not sure.
But they have the room to do it. There'll be nothing amiss.
There'll be nothing amiss. No, most of these things don't have a significant budgetary impact. And I think some of these representations have been made earlier also. So I know that the finance ministry is well prepared. I think my sense is just from a timing standpoint when they want to do it is the issue.
Particularly, capital gains rationalization, TDS rationalization. I mean, sometimes you look at that and you wonder what is the logic behind the systems that we have in place currently. You talked about dispute resolution, and you flagged it as an important area for lay viewers. Can you just explain exactly what you mean and whether there's some expectation of progress in the interim budget?
I think we have made reasonable progress in the last 12 to 18 months in various areas. But I think one area where there's a lot of clogging up that's happening is in the area of CIT appeals. I think there's a lot of clogging up that's happening there. If they can find an easier way of, so that some of these things don't get into, litigation for 5 years, 10 years, 15 years, to alternative dispute resolution mechanisms, some of which are there, but they've either not been fully implemented or they're at slabs of income where probably the dispute levels are lower. That's what I would say. I think also beefing up the APA and also the bar, which is the advanced ruling piece. I think those things will be, my view is that those things will be very important. Again, I think the Finance Ministry is aware of this. They are well equipped to handle this. They'll have to choose the time when they have to do it.
They'll have to choose the time.
If I look at from an investor perspective, I would say consistency of tax rate, which has been the hallmark. Just figuring out that there are ways to resolve disputes so that they don't go on for 10, 15 years would be the most important. GST is another area, but I don't think they'll address that in this budget.
Okay, Mukesh, if I can get you to weigh in terms of your experience on the improvement in the dispute resolution environment, it would be good.
I largely echo what Rajiv mentioned earlier. We may not find many of these in the finance bill, even if she moves legislative amendments, which is unlikely in an interim budget. But I think the government has a knack of, making progress on this on a continuing basis. Case in point is the tribunalization of GST. So though we've had, 4-5 years of GST law, we've had GST assessments, but the disputes were landing up in the courts by way of writ petitions, and the courts never wanted to get into the merits of the case except give temporary relief to taxpayers by staying the proceedings or staying the recovery of demand. So tribunalization of GST was an important step which was taken 6 months back because it was clocked in disputes on the vexed issue of appointment of members,
right.
And which was cleared eventually by the courts, and that led to the appointment of members. The point that Rajiv made earlier, which is the first appellate authority, CIT appeals he referred to, that's an area where most of the appeals get stuck. However, having said that, I see a fair bit of development occurring on streamlining the dispute resolution. So if you just look at the digitalization of court records, the faceless appellate schemes, all of these measures are not necessarily featuring in the finance bill.
But they're happening parallelly.
But they're happening.
I'm just going to take in Rajiv's view here on, and this is a very simple question to you. Interim budget, modest expectations, we've all made that point repeatedly. But if there's one thing missing from the speech which will really be a disappointment for you, your peer group, flag that off.
No, I would say one would really look at macroeconomic guidance for next year. I think that's the
most important?
That is the most important, and specifically what is the CAPEX spend, because that's really something that pushed the economy.
So you're looking for a 20% increase in government CAPEX spend?
Yeah, I mean, I think it really depends on what's the budget expectation they have on GDP growth. Are they looking at 7%? If they're looking at revenue collection growth of 12%, then you have flexibility of increasing CAPEX spend by 20%. But if this government also, they've done a very good job of making conservative projections. They've almost overachieved on the revenue side at least. So if they're able to do that, I think that probably, in my view, would be the single most number to look at.
One number that we haven't talked about, and I'm wondering how important it is in your assessment, is the fiscal glide path, the fiscal deficit number that they put in the document. A, is it important? B, what are you expecting it to be?
It's definitely very important. I'm expecting it to be in the 5.3%, 5.4% kind of range, specifically given the fact that they've given a 4.5% number for 26. And from 6.4% to 5.9%. So I'm expecting that to be in that kind of range.
And any sort of number that's higher than that, you'd be wary?
Yeah, I'm pretty sure that it'll be in the 5.3 to 5.5% range. I think this government that way has been on the fiscal consolidation part has been very disciplined.
Well, we're going to have to leave it at that. Look forward to touching base with you later in the day, post an opportunity to hear what the finance minister actually presents. A quick break right here on NDTV.
All right, that was the corporate view coming in from Delhi, and we'll be getting you those updates through the day. Remember, you're going to get a very comprehensive 360-degree analysis right here on NDTV Profit. Meanwhile, time for a very short break, but we're back with our budget masters right after this. Don't go away. Well, exciting morning and packed house here at the NDTV Profit Studios in Mumbai as we are prepping you for what is coming. Less than 30 minutes left as scheduled for just about 35 minutes left for the finance minister to present her 6th budget. It's going to be an important one as we've been speaking. It comes before an election, but one that this government at least is very confident of winning and will show policy direction. Meanwhile, what's happening to the markets? Moving into positive territory, I would say with caution and some trepidation. What is really racing ahead, though, is auto. There's no stopping Maruti, and I'll just quickly pull up some of your auto numbers this morning. So a couple of things happening. Good numbers for Maruti relatively. Your auto passenger vehicle sales, etc., are all out today, and that's expected to be good as well. Maybe a bit of benefit from an infra push if that's announced in the budget. So 4% zooming on Maruti. Meanwhile, let's get back to the conversation right here in the studios, and I'll come to you, Mihir. A thing that I have noticed with at least the Modi government budgets, and correct me if you're wrong, for a long time, any kind of announcements that were seen as quote-unquote populist was seen as negative for market. But that is something that has become very easily absorbed when it comes to budgets that this government presents. Do you see that trend continuing? That, okay, if there is an increase in Pradhan Mantri Kisan Nidhi Samman payout from 6,000 to 9,000, no big deal, theek hai, chalega. We need it. You want to build up bottom of the pyramid. What the market is looking for is whether you're actually spending on CAPEX. And do you think that trend continues? So they can get away with a little more subsidy push or populist moves?
Certainly. But having said that, we also must realize that 2014 onwards till 2019, we actually saw a decent reduction in the overall deficits and subsidies. Yeah. The subsidies as a percentage to GDP till 2019 actually came down quite well. It's only because of COVID that they had to increase the subsidies, especially on food and fertilizer subsidies. So I don't think there is a general bent of mind to be populist. Wherever they are seeing pockets of stress or need to do it, they are doing it. It's not even across the board.
So no reverie.
No reveries. And I mean, look, during COVID, you had to do it, right? There was no other choice. But the general tendency has not been to blow up the fiscal deficit. So I would not be too worried about that. There is a strong focus on capex. You name any minister, they are talking about any kind of incentives required either by the private sector or even pushing the PSUs to spend their cash on capex. So that trend of capex should continue. As I said, they've been hiking capex budgets by almost 30% CAGR for the last 3 years.
But it's going to slow down this year.
It would slow down, but I'm saying, given a choice, they would still go for good deficit rather than a bad deficit.
You're not worried about maybe a slowdown in spending on capex and what it does to those sectors and stocks that have run up massively? Your railways, your defense, your infra, etc. Are you worried?
Look, railways, I'm not too worried, at least for the next few years, because they have laid out a path to modernization and they will continue to fund it. I don't think there's any backtracking on the existing announced capex, which is robust enough. On defense, actually, physically, they have not increased the capex budgets by dramatic amounts. It's the Atmanirbharta and manufacturing in India which has been the exciting point, right? And now we are even talking about exports of defense. So I'm not too worried about railways. Roads, again, there is a certain momentum that will continue. NHAI can fund itself. They have been kind of, and plus there is also the InvIT route which is becoming popular. So they can monetize some of the assets also. So there are enough levers to sustain capex. It may not be 30% growth, but even if it's a 20% growth, I'd be happy.
Taking a cue from CAPEX, what do you think is happening on private CAPEX? There's clearly been no pickup on that front. Anything that could be foreseen or expected to boost private CAPEX, because that wheel also needs to run?
Look, private CAPEX, again, on the headline, if you look at the survey data, etc., it seems to be taking some time. But if you look at the order books of capital goods companies, engineering companies, they are pretty much full.
Yeah, right. It's the execution that could potentially be a concern.
I think this time around the difference is that unlike the 2003 to 2010-11 boom, it's not the capex that's happening is not in mega projects. It's not like massive refining capacities or massive steel plants or massive oil and gas fired power plant. This time around it's more granular. I think there's a lot of mid-sized companies which are doing capex in the manufacturing front. The PLI scheme, I think, is a huge stimulus, and the impact of which probably we are going to begin to see now. Yeah. And the good thing is that PLI is really speaking open-ended. Any sector which needs incentives is getting it, frankly.
Taking a cue on that PLI, usually out of budget, do you think there'll be any indication on this? Sectors may be potentially added, extensions may happen at this budget today?
They could, but as I was saying, it's open-ended. Any sector. We started with mobile phone manufacturing.
And it's not time limited to today in that sense.
Exactly. I mean, any sector, frankly, any amount also. If industry is going and representing the government, they seem to be having an open mind.
Yeah.
Okay. The other aspect is energy. And we know that there are paths laid out. Company after company cited that in their presentations that, hey, this is the opportunity size, etc. There was some mention or a significant mention last budget as well to both Shankar and Mrinal. Shankar, starting with you. What's the focus on energy? Renewables plus the outlay and the impact thereof.
So if you look at the data, we import 86% of our crude requirement.
Exactly.
This is unsustainable, really speaking.
Exactly.
We have managed now because thanks to Iran and Russia and stuff like that. The other part is that 49% of our power generation depends on coal, which again is an issue as we transition to, for climate change zero. Or India's position is that capping net carbon emissions, not necessarily net zero. So what do you do? So the Prime Minister announced on Jan 22 or 20, the day after the Ram Temple thing, the PM Suryodaya program, the solar for 1 crore or 10 million houses, that's unfunded just now. So that funding might come through, but it might be expanded to other urban. So the 10 million is primarily aimed at bottom of the pyramid story. It is the renewable version of Ujjwala.
Yeah.
So once that kicks in, they might create, which is why I said that if they redefine the deficit in terms of what is the green deficit and non-green deficit, there will be an energy transition story in this. And while we talk about private capex, I just wanted to add, we must remember that the corporate tax cut that we saw in 2018, 2019 is sort of expiring. And I don't think this is going to be renewed. So that the substitution will be through PLI, because it's a much more viable, much more directed idea. But all of this depends on whether they're able to grow the economy, because as it is, the Reserve Bank of India has sort of screamed about the credit deposit ratios.
Yeah.
And why deposits are not growing is also a part of the mystery as to why private final consumption is not growing.
Yes.
So there is this thing. So I think CAPEX is on, I don't think, and there might be something new. How do you add to the government CAPEX? How do you add to the government infra spend? It's to create the projects, green hydrogen, solar, multi-projects, basically.
Yeah, but Mrinal, that's the point, that one, that there is a clear data given about the targets on the green side, wind, solar, etc. And two, as much as we've spoken about government CAPEX and private CAPEX, household CAPEX also needs to be given some bit of a leg up. So therefore, one, do they do anything on the renewables side meaningfully, and how meaningful could it be? And could there be housing swaps, for example, loosely put, which could bring about maybe one factor of household CAPEX into the fray?
So well, look at the technology landscape. I don't think we have a serious base power renewable option around. The government can create subsidy, can create framework, and it can incentivize some bit of peak power replacement through renewable, but we don't have a technological solution which is going to take over, let's say, 49% of our coal power generation. It's not there if you take away nuclear. So well, we will see the transition is going to be there towards renewable, towards greener mean of things. The government will do its bit, but I think unless science comes up with a serious technological solution, it will have its own issues.
But not the remit of the budget. So on the budget, what can happen which can even help some of those sectors or some of those themes? Because there has been a run out there anticipating continued government support, right?
There is one point to add to what he said. In terms of technology, the government is actively looking for storage solutions. Both keeping in view the hydrogen, green hydrogen idea and the solar. And you know, Mr. Musk has visited Pune, and there is an office he has set up there. They are talking to indigenous startups who are looking at storage. So you might see something, and I hope to see something, an incentive for storage, energy storage.
Sure. But yeah, so okay, maybe that too, and we'll look out for that. But just rounding off my questions, therefore, and I'm approaching this purely from a markets angle, that so many sectors and themes have had this spurt in the anticipation that continued support comes in. So what stands out in this budget or the next, but whatever, what stands out on the renewable side or on the housing swap side?
Well, housing is a clear darling. It is the sector which creates the biggest employment. It's the most formal sector, which has the largest number of formal employees, and it has traditionally had tax swaps. It won't be a surprise if you want to actually move up the formal employment number, you want to bump up the household expenditure, there should be increase in the tax swap in some form and shape for housing.
You think affordable housing is the route to do it? Because that scheme hasn't really taken off, and now there is a demand that please increase the ambit of where you call it or how you define it as affordable housing.
Well, it could be a combination of both things. Number of taxpayers are just 6%, so if you want to really reach the masses, I guess affordable housing definition might be a good way to. And private CAPEX, in the private CAPEX side, the government has done its bit in terms of what it has rolled out on PLI. It needs to continue to spend on the CAPEX side in the economy so that, the buffer, the slack in the system goes away. We have the job generation, we have the economy picking up, and when the revenue or taxation revenue does reflect at some point, they can slow down on the government expenditure, and it will actually compress the fiscal deficit that we've been bothering so much about. In absence of good spending by the government today, we are not on the right trajectory to achieve fiscal consolidation 3 years down the lane or 2 years down the lane. It is required as of now that the government invests, because that will result into more jobs, more economic activity, which will increase the revenue for the government, which will finally help controlling the fisc. In absence of that, we will keep dragging things and it will go nowhere.
Well, it's a tightrope, you have to admit, a trinity of some impossible choices to make. What we'll do is take a break. Just before we take that break, though, about a few An hour and 20 minutes for the markets. Paytm still sulking, down about 20. But on the flip side, aside of autos, there is also some other stocks which are doing well. Shree Cement is a case in point. So that has done well. Not that all the other cement stocks are doing well, but Shree was up about 5% the last time I checked, 4.5% for it. And FMCG, it's the morning for FMCG, Godrej Consumer in particular, but some of the others like Dabur up 6%, not doing too badly either. Take a very quick break, come back with more.
It is a matter of truth that the 1st February 24 budget that will be announced will just be a vote on account. By 2047, India should reach a $30 trillion economy size. For the growing population, growing youth, young, who need more skills, who need to upgrade their skills, you need the newer areas also to get priority.
All right, less than 20 minutes to go for the big budget speech that we're waiting to hear. Finance Minister Nirmala Sitharaman's 6th speech, an interim budget speech, but nonetheless an important one. We have a packed house here at the NDTV Profit Studios. All our budget masters are in, and I'm going to introduce them one by one. Manish Dangi joining us this morning. Mihir Vora is here. We have Shankar Iyer and, of course, Mrinal Singh are there in the studio. So welcome once again to all of you. Manish, we've been having an interesting conversation about whether the expectations or the possibility of populist sounding measures are now priced in. It's not going to ruffle too many feathers because there is an understanding that this is a pre-election budget. You have to at least make some announcements. Now, how much money you spend or not is a different story. You would agree?
So there are a couple of things. One is, of course, if you call it Modinomics, he does tweaks, but no extraordinary stuff is ever done. Neither in Gujarat for his 12 years term and nor the last 2 election speeches, So there was nothing extraordinary. Two is that as it is, budget and its finances are such that there's very little wiggle room now to sort of expand incrementally. So it's going to be only reallocation. Third is that within the budget of, let's say, government in India spends about 15% of GDP, just about 3.3% is spent on welfare. So only that you could tweak a bit, Some of it could, so very likely there's going to be a sort of subsidy going down by about 15-20 basis points as a percentage of GDP. And that much could actually go in terms of giving it away to through Kisan, some insurance scheme, likely some scheme for the organized labor because they have a data now. A lot of this labor, sort of urban labor.
Gig workers.
So not gig work, but generally all sorts of labor. So, it's sort of we are headed towards, in general, in the next term, kind of a basic income for 50-60 crore Indians.
Yeah.
So slowly, a lot of indirect subsidies, fertilizer, food will be subsumed in stuff like Kisan. So you'll have a labor-oriented sort of scheme most likely today. Kisan will have about 25-30% uptake. So from 6,000 per year to sort of likely to 8,000-9,000 bucks and so on and so forth.
So there's talk of an urban version of Manrega. Or some version of a...
So Narega is a insurance scheme effectively. It's going to be, it's not an employment guarantee scheme. Likely is that you're going to have a transfer. Because in urban, you cannot actually have urban landscape. You cannot offer Narega.
No, in the sense of when I say version, I mean a payout kind of scheme where you have some guaranteed income for a certain number of days. We could see the contours of that.
Sorry, So basically, urban version of Kisan.
Okay, that's better put.
Manish, what are you expecting on tax buoyancy? What do you think is being priced in or penciled in by the government? Of course, the first 8 months, it was up by 30%. Compliance, admin, some believe is a one-time step up. Others believe because it's compliance and admin, that number will continue running. How do you feel about your income tax and also out of that ambit, so indirect tax, so your RBI dividends, PSB profits, what is the sense? What is the pricing in that you're working with and that number which you're comfortable with and I believe the markets also would be?
So from a taxes point of view, it's been an extraordinary year.
Exactly.
And so to that extent, everyone is surprised, including FM, us, all analysts. Everyone is surprised, especially in direct taxes. The buoyancy has been extraordinary.
Yeah.
Some of it is sort of a mean reversion happening because, post-COVID, 2-3 years were very bad. 2 years were very bad. And then it's sort of going back to 2017-19 levels. But the buoyancy has been very, very strong. Very, very likely that it will fade in next 12 months. Again, the way budget math works and this particular FM works is that she would not assume more than 1.2 times buoyancy, which is a historic buoyancy. So it's sort of, you would get a 10.5% nominal GDP growth in budget estimate, and you will get about 11.5% odd tax growth. So that is what you will get. The small sort of a nuance in buoyancy is that while direct tax buoyancy is very high, the indirect tax, which is GST, is not that high. And so it sort of reveals a little bit about the economy of the K-shape that we've talked about, that a small 5-7%, 10% of the population which actually consumes sort of your air travel, a lot of tourism, that guy is actually doing very well. And his income and the corporate taxes and all sort of booming, twice of GDP growth. But the GST, which is sort of a proxy of a general consumption growth, that is what you see in the staple growth, discretionary, that is not doing that well. So there the buoyancy is only 1.2 times. In aggregate, the buoyancy this year would be assumed at, between GST and direct taxes all put together, more like 1.2.
And what about non-tax growth? You alluded to RBI dividend, PSB growth, but what do you think is a fair expectation? Again, this year was an anomaly of sorts.
Yeah, so I think even next year, the dividend from RBI, even the PSU bank dividend will begin to actually kick in a substantial manner now. So to some extent, I think the dividend as a percentage of GDP will sort of, in my view, my assessment will rise by 5-10 basis points as a percentage of GDP. These are big numbers. 10 basis point is 30,000 crore, let's say. 33,000 crore. What has been a big disappointment so far is divestment for the last 2-3 years. I think we've run out of assets now.
I think this government is one that does a buyback instead of divestments.
Or sort of, rotate the
or
assets.
go on a list, right?
What do you mean we've run out of assets? Aren't we sort of late on
run
putting
out of
that?
assets that the capital market households, the sort of a blue-blooded capital is interested in. Which actually, so we've run out of those assets, and which
All
is
the
why,
good ones are gone.
As a percentage of GDP, the non-tax revenues have sort of stagnated at 1% or thereabouts. It used to be at some point in time 2%.
Sorry, before I come to you on bonds, Mrinal, this PSU rally though, and Manish's point is well taken. We've kind of missed the bus almost every single year for the last 2 on this divestment thing. But could the PSU rally help the government put out a number which they can say is believable on the divestment side for FY25?
Well, if I were them, I would use it.
Nicely put.
Okay.
But I think, Shankar, you had a good point on divestment. You want to come to that?
I think that the upside available for them, the headroom available is phenomenal. I mean, the SEBI requires you to have 25% liquidity, blah, blah, all that. None of the PSUs, most of the PSUs don't have it. There's an announcement, I think 5-6 years back, where they said they will reduce bank holdings to 51%. That's bank stocks are not too well, so you will actually give them the buyer the upside. The other thing is that if LIC at 95% or 90%, does it really make a difference to the corporation? I don't think so. So if they put out 5% more as an offer or as a Bharat ETF, they could collect. So somewhere the government has struggled to do the asset monetization, and somewhere it has struggled to do the divestment process. And I think because of the plethora of clearances and rules and all, and also there is a belief in the government that divestment gives them a bad name in the political arena.
I was just going to come to you on that. Is it a question of intent or ability? Because on all of the other things, politically and otherwise, this government has shown the capacity to do what they want to.
So there is a striking contrast if you see. The corporate world yesterday, Dabur, Bajaj, everybody actually spoke like they were releasing political manifestos. Rural spend should go up, Narega should go up and all this. Okay, you never heard this before. People would squirm if you spoke about subsidies 10 years back. Now the CIO actually is almost sounding like the new manifesto. But if you see the government's approach, it's still very cagey about issues like asset monetization. Also, the depth in the market. Suppose they monetize the asset and a corporate wants to buy. The deposit growth, credit growth issue that is haunting the Reserve Bank of India will come into play. So probably next year, once the Firangs come in with the JP Morgan money or the other money, there might be some room, some headroom created. I don't know. There needs to be an innovative way to think about this. And one of the ways that I have been suggesting for a long time is to create a sovereign trust, put everything inside it, securitize it, and then issue a ETF on it.
But you should have some thoughts here.
In the run-up to 2014, me and many of our colleagues read biographies of Modi, and one thing that we concluded then, and maybe things have changed, because Modi to a certain extent has changed since then, is that he never believed in all this, selling PSU assets. And so even in Gujarat, as a chief minister, his belief was that, okay, let's build our assets better, let's get better ROEs. So things like GSFC, many other there was a sort of a pride in, actually running the government corporations better.
Most certainly.
So I don't know whether it is ideological or otherwise, but the fact is that, divestment isn't happening.
It is very strategic. It is politically strategic because he believes, and people around him believe, that privatization creates challenges for the government in terms of the aggregation of wealth in certain quarters. The concentration of wealth is something that has bothered him, and he doesn't believe that private sector does better than the government if the government is efficient. It is a core belief. You can't do anything about it.
Yeah, it's possible.
But there is always scope for divestment, not
privatization.
privatization.
So that's why.
You don't need to privatize.
So that's why I said that the sovereign trust like Temasek or the KfW in Germany can serve the purpose.
Just a quick mention, guys, on the market. It's flat, but Bajaj Auto has reported its auto sales numbers. We've been talking about how auto has been in such a sweet spot this morning and has been on a run. Numbers have come in pretty impressive. The stock is looking okay, 1% higher. The Jan total sales are up 24% YOY, and the CV sales have risen 6%. We will break that down if we get some more time before we run into the budget in about 9 minutes. But yeah, Neeraj, you wanted to come in?
No, so I just thought because Manish is here, and I would want to actually, just before I come to you, Manish, on the divestment side, you have this strong belief as well. Mrinal was saying that he would use it. You would believe the numbers could be high on the divestment proceeds side for FY25?
They should, because look at the valuations of PSUs that have gone up in the last 1.5 years. If there was a time to do it, this is the time, right?
Well, let's see if they
and there are lots of companies where the government owns 75+%. So there's ample headroom for at least 30 to 50,000 crores of divestment without really doing any strategic sale, frankly.
Okay. And before we take that break, Manish, what would please the bond markets? What would not please the bond markets?
And so after very long, actually, and it's almost like bond guys have had this, memories have faded that, there could be a structurally things can get better. The bond math never worked out in India since 2007, since Chidambaram did what he did. And in 2009, there was a massive borrowing. Finally, because of demographics, because of the cleaner way we present things, because generally inflation in India has well behaved, the fiscal policies, even though the fiscal deficit is higher, but because the structure of the spending is such that it does not inflate, I think we are headed, not just this year, but generally over the next 5-10 years, lower and lower yields. Okay, and so this particular budget, 5.3, 5.4% fiscal deficit, reasonable 15 lakh crore of gross borrowing, about 11.5, 12 lakh crore of net borrowing. These are the numbers, already out actually. Delhi has sounded us off in some sense, and everyone is going to celebrate these numbers. These are decent numbers.
Okay. We get 12 was slightly higher than 12, but you've got that $25 billion coming in. That would still be okay, I'd imagine, for the markets,
Yeah, but
right?
very unlikely it'll be higher. This is going to be a bond budget.
Yeah,
more
higher, if anything, will be lower.
Bond markets.
Yeah, but hey, guys, we need
Bond
to slip into a
currency.
very quick break. So we'll continue this conversation on the other side, but need to slip into a very quick break. Back with our budget masters and minutes away from the budget speech.